So the market has had 2 days of catastrophic collapse, possibly the worst 2 days ever. Lost an average of over 1,500 points each day. I think we lost like over 1,000 the first day, and we lost over 2,200 the second day. That's a loss of like 3,500 over 2 days. We've never really seen this. This is like actually worse than COVID at this point. Over any 2-day stretch, and this was completely on the unforced error of tariffs. Now, crypto hasn't actually dumped, but I think like COVID, I do think there might be a delay and then it could actually dump next week or possibly the week afterwards, because crypto will basically reflect the rest of the investment market. Right now, there might be a lull period. Maybe some people are being kind of like driven from the US dollar into crypto, but crypto hasn't really gone up either. It just hasn't really gone down. But I do see, like, from Crypto Quant and other places, that there are going to be a couple of whales already that are like sending their crypto to exchanges, so they might actually sell soon. And if that happens, crypto could actually collapse too. But regardless of that, I think crypto and the overall stock market will actually dump even further. In the summer. And I don't think we've reached bottom, and we're going to basically find out why. Now, let's actually focus on the stock market, because whether it's like immediate or delayed, I do think crypto will eventually follow that. But the thing is, I think one of Donald Trump's plans to bail him out was basically Jerome Powell. Now, Jerome Powell, some people I've seen on Twitter say he's a Biden guy. He is actually not a Biden guy. He's an original Trump appointee, the only competent one, and the only one that's actually a leftover from Trump's previous administration. Now, you could say he's the Democratic agent, but he's not. He also told Elizabeth Warren and Joe Biden to go kick rocks when they wanted him to cut rates early, and he's telling Donald Trump to go kick rocks at this point. The speech he gave today was not dovish. It was hawkish. And he said, he's going to have to wait before cutting rates because he believes that Donald Trump's tariffs are probably going to up inflation, which they most likely will. Tariffs are generally just a tax on the consumer for the most part. So the thing is, cost of things are going to go up, aside from oil, which actually might be the one saving grace. But oil's kind of going down right now because basically everyone's pricing in a global recession at this point. So the thing is, if inflation goes up, Jerome Powell might break hearts and not cut rates. That kind of foils Donald Trump plans of having some kind of relief for his catastrophic policy at this point. And yes, it has been very catastrophic at this point. I think at this point, I don't think anyone can actually say it's Bidenomics anymore, because we actually saw it happen in real time. Right when he announced the tariffs, we went down the first day. And right when China decided to counter tariff 30%, we actually went down 2,000 points. Canada has already counter tariffed our auto tariffs. And I don't know if Trump's going to respond to that. And plus, the EU is going to respond in the middle of the month, probably next week or the week afterwards. The CPI does come out next week. I don't expect this CPI. Well, this CPI is not going to reflect it because this CPI is for March. The tariffs don't go into effect on April 9th. Maybe next CPI will start to reflect it. And if the tariffs are still there by next CPI date, I think the economic data will definitely reflect it. And I think people will start really panicking at that point once they see the data actually come out, that inflation is actually up. And of course, second quarter GDP, when the readout comes in July, if these tariffs stay in place for any amount of time, for any of our major trading partners, Canada, Mexico, the United States, or EU, those are the top four, and they account for 60-70% of our trade. So if the tariffs stay in place for any of those guys, I definitely think the economic output is going to be down. You can see the results in the Dow Jones Industrial Average at this point. So the one plan that might have actually worked, the lowering of interest rates, does not seem to be working for Donald Trump. And if Trump somehow forces Jerome Powell out, appoints his own stooge, which then does what he wants, the markets aren't going to react well to that. And I think he does actually know that. Because obviously if you force Powell out just to hire your stooge to do what you want, that means the market's already in a really, really bad place, which some people already think it is because, we're down 3,600 points from a while ago. And like I said, I don't think crypto is going to be able to hold up the boat if the market keeps dropping. I think if we drop Monday, like crypto will probably drop later in the week. And if we actually drop Monday and we don't have at least a small recovery before we continue dropping, I think we're totally screwed because that essentially means we're in an abyss type of situation where there is actually no bottom. Whereas if we have a small lift up recovery Monday or a bigger one, like a couple hundred points, that means like the market does have some bounce left and there is some faith left in investors. Because if investors don't have faith in the market, they're going to leave crypto as well. And yes, the 10-year bond rate did come down, but I think that's actually due to an increase in demand in the bond rate. Because if you really think about it, it makes sense. If there's a sudden uptick in the demand for bonds, then the yield will actually go down because more people want them, the lower yield you can actually get. So I think that actually has to do a lot with people leaving the stock market, maybe putting even more money in bonds at this point. Right now, that might actually help the crypto market, but as people lose more and more confidence, they're going to pull money out of crypto and into bonds as well. And some of those ETF sellers are definitely going to sell. Plus, the chance of recession has gone up to like 60%, up from 40%. So that's going to get people rattled too. Right now, it's just a lot of bad macroeconomic news. And at this point, crypto's fared pretty well because it hasn't gone up, but it hasn't gone down. But I think like eventually it will actually drag down after a week or two. We saw this during COVID as well as in some other instances. Once the market really starts dropping, crypto eventually follows along. I don't think it's like its own niche thing where it'll just detach from the market because ultimately it is an investment asset. So that's why I don't think we've actually hit the bottom right now because other countries are still waiting to counter tariff. I don't think these tariffs for our three major trade partners are going to go away, within the next 6 months or in the next year. And I definitely think like once like a recession is actually proclaimed, once Jerome Powell doesn't give you the cuts that you actually want, and once inflation actually goes up and GDP comes down, people are really going to panic, as people always do. And this summer is like basically when that's going to happen. So I do think we are going to go down quite a bit this summer in both crypto and the traditional markets. Which one will go down more? I'm not really sure. But have some dry powder ready. That's assuming the U.S. dollar still has faith in the rest of the world. Because if the U.S. dollar falls apart, which I doubt it will, then we have a lot more problems than just crypto. And it's really just kind of like a reshuffling of a lot of stuff that we actually know. And none of the markets are going to benefit from it at this point. There's just going to be a lot of chaos going on. But this is a self-inflicted wound by our president because this didn't actually have to happen. The reciprocal tariffs are complete garbage. They're actually not reciprocal at all. You can tell they're not reciprocal because he put like a 10% tax on an island with nothing but seals and penguins. So obviously they weren't tariffing us. So essentially, I don't know why we would actually tariff them. He didn't actually even, like, I don't think Donald Trump has even looked at a tariff schedule before actually making these announcements because his calculations are based on the trading deficit the United States actually has with each country. And he just basically divides that by the total amount of trade. And he considers that the tariff they actually impose on us. That's not what a tariff is. A tariff is the percentage of tax they actually put on our imports, not like how much deficit we have with each country. The deficit percentage is just basically like we consume as Americans, as a country, we consume more than the other country. That's not a tax. Just because I buy things from Target and then I eat them and Target doesn't buy anything from me doesn't mean that Target is tariffing me. It just means I need Target's products and therefore I pay Target money. That's not how tariffs work, but that's what he's treating tariffs as because he's not basing them on the tax or tariff schedule. He is actually basing them on our deficit with that country. And that's going to be very hard to basically neutralize because other countries simply don't buy or consume as much stuff. Their people don't have a consumer mentality, and the consumption of each person in that country is way lower than the United States. The U.S. people have one of the highest rates of consumption of anywhere in the world outside of the city states like Luxembourg. So it's going to be very, very hard to be like on even keel. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.